In the world of real estate, the wealthiest individuals have developed and perfected strategies that allow them to accumulate substantial wealth, often while minimizing risk. These strategies are not necessarily complex or reserved for seasoned investors. In fact, many of them are highly accessible to beginners willing to learn and take calculated steps. Today, I will share 7 real estate strategies used by the wealthy that beginners can adopt to start building their own wealth through real estate. Real estate is often considered one of the most reliable and lucrative ways to build long-term wealth. One of the key reasons for this is the fact that real estate, unlike many other forms of investment, appreciates over time. But beyond appreciation, the wealthy have learned to leverage other advantages of the real estate market, creating streams of passive income, long-term wealth, and financial freedom. The first and most important strategy that the wealthy use is leveraging other people's money, or OPM. For the wealthy, real estate is not about using their own cash to fund deals. Instead, they use other people's money to finance their investments. This is often done through leveraging loans from financial institutions, private lenders, or partnerships. By using OPM, wealthy investors can control a large portfolio of properties without putting up a significant amount of their own capital. For beginners, the idea of leveraging may sound intimidating. However, it is a strategy that's available to almost everyone. For example, a beginner investor might buy their first property using a mortgage loan. The bank or lender will provide the majority of the capital needed, and in return, the investor pays monthly mortgage payments while benefiting from the rental income or the property's appreciation over time. By leveraging this loan, the investor is able to control a valuable asset without having to come up with the entire purchase price upfront. A key thing to keep in mind when using leverage is that it magnifies both potential returns and risks. If the property increases in value or generates strong rental income, the investor benefits from the full return on the entire property, not just the portion they personally financed. On the other hand, if the investment doesn't perform well, they may still be responsible for repaying the loan. Therefore, beginners should be strategic and conservative in how much they borrow and ensure they have a solid understanding of the property's income potential and value trends. The second strategy used by wealthy real estate investors is buying undervalued properties and adding value. Wealthy investors are not always looking for fully renovated turnkey properties. Instead, they often seek out distressed or undervalued properties that are priced below market value due to factors like poor maintenance, cosmetic issues, or unfortunate market conditions. They then add value through repairs, renovations, or by rebranding the property in some way. This is a strategy that can be especially profitable for beginners who have the ability to do some of the work themselves or who are willing to put in the effort to find and manage contractors. The key to success with this strategy is the ability to identify properties with hidden potential. This may require knowledge of the local market, an understanding of property values, and a keen eye for spotting deals that others might overlook. A property that can be purchased for significantly less than its market value provides the investor with immediate equity after repairs and renovations. This strategy has the potential to generate significant returns, but it is also important to remember that adding value requires an upfront investment of both time and money. Beginners should assess their own capabilities and resources before pursuing this strategy, as underestimating renovation costs or the time required to complete a project can quickly eat into profits. The third strategy is focusing on rental properties for long-term cash flow. While some real estate investors focus solely on flipping properties, wealthy individuals often build wealth through rental properties. Owning rental properties can provide a steady stream of passive income, which is a great way to build wealth over time. The key is to purchase properties in markets with strong rental demand, places where there is a steady influx of people who need a place to live, but where property prices are still affordable relative to rental rates. For beginners, the idea of owning rental properties can seem daunting. However, it's important to understand that, when done properly, owning rental properties can be a great way to generate a consistent income stream. Additionally, rental properties tend to appreciate over time, adding to the investor's equity. Wealthy investors often target multifamily properties, such as duplexes or apartment buildings, because they allow for multiple income streams from a single property. Beginners can start with single-family homes or small multi-units and gradually expand their portfolios as they gain experience. When pursuing rental properties, it is essential to factor in the costs of maintenance, property management, and vacancies. However, when managed well, Rental properties offer long-term wealth-building opportunities with less risk compared to some other forms of real estate investing. The fourth strategy involves focusing on tax advantages and using tax-deferred vehicles. Wealthy real estate investors are highly skilled at leveraging the tax advantages associated with real estate. The U.S. tax code, for example, offers several provisions that allow real estate investors to minimize their tax liability. One of the most common tools used by wealthy investors is depreciation. Depreciation allows real estate investors to deduct a portion of the property's value each year from their taxable income, even if the property is appreciating in value. This can result in significant tax savings over the life of the investment. Additionally, real estate investors can often take advantage of 131 exchanges, which allow them to defer capital gains taxes by reinvesting the proceeds from the sale of a property into another like-kind property. While these tax strategies can be complex and require careful planning, they are one of the reasons real estate is such a favored investment vehicle for the wealthy. Beginners should consult with a tax professional or accountant to fully understand the tax advantages available to them in real estate investing. The fifth strategy is diversifying across property types and locations. Wealthy investors don't put all their eggs in one basket. Instead, they diversify their real estate holdings by owning a variety of property types, including residential, commercial, and industrial properties. They also spread their investments across different geographic locations, reducing the risk associated with any single market or property. For beginners, this strategy can be executed by gradually expanding their portfolios to include different types of real estate. Starting with a few rental properties in one location and then branching out into vacation rentals, office spaces, or even commercial properties is a good way to diversify. It's important, however, to ensure that each property fits into the investor's overall financial goals and risk tolerance. Diversification helps minimize the impact of any downturns in a particular segment of the market or location. By spreading investments across different asset classes and geographies, wealthy investors can protect themselves against market volatility. The sixth strategy is to build a strong network of experts. One of the most important strategies that the wealthy use in real estate is building and nurturing a network of professionals who can provide expertise and guidance. Real estate investing is a team sport, and the wealthiest investors know that they can't do it all alone. They rely on a network of real estate agents, brokers, lenders, contractors, property managers, attorneys, and accountants to help them make informed decisions. For beginners, it's critical to build a reliable team of professionals who can provide advice and assistance as you grow your portfolio. Surrounding yourself with experienced individuals who can help you avoid common mistakes and guide you through the process can significantly increase your chances of success. Whether it's a trusted contractor who knows how to handle renovations or a seasoned agent who can identify undervalued properties, your network will be one of your most valuable assets as you pursue your real estate goals. And lastly, the seventh strategy is to continuously educate yourself and stay informed. The wealthy understand that in order to succeed in real estate, they must continuously learn and stay updated on market trends, legal changes, financing options, and investment strategies. They attend seminars, read books, listen to podcasts, and surround themselves with other investors to constantly improve their knowledge. For beginners, this is one of the most crucial strategies to adopt. The real estate market is always changing, and staying informed is essential for making smart investment decisions. Whether it's learning about new technology tools for property management, understanding new zoning laws, or identifying emerging markets, continuous education is the key to long-term success in real estate investing. To wrap up, these 7 strategies, leveraging other people's money, buying undervalued properties and adding value, focusing on rental properties for long-term cash flow, leveraging tax advantages, diversifying your portfolio, building a strong network, and continuously educating yourself are all methods used by the wealthiest individuals in the real estate market. While some of these strategies may seem advanced, they are all accessible to beginners who are willing to learn, take calculated risks, and build their knowledge and network over time. Real estate investing is not a get-rich-quick endeavor. It requires patience, discipline, and the willingness to make informed decisions. However, by following these strategies, beginners can set themselves up for long-term success and begin their journey toward building wealth through real estate. Whether you're just starting out or looking to expand your existing portfolio, remember that the wealthiest real estate investors didn't get to where they are by accident. They followed a set of proven strategies, and with the right approach, you can do the same. Leverage is one of the most powerful strategies used by wealthy real estate investors, and it involves using other people's money, OPM, to finance property acquisitions. The concept behind leveraging is simple. Instead of using your own capital to purchase real estate, you borrow money from a bank, private lenders, or even form partnerships with others to fund the deal. This allows you to control a much larger investment portfolio without risking all of your own funds. Wealthy investors are masters at leveraging OPM because it enables them to scale their investments quickly while mitigating the personal financial risk. For beginners, leveraging can seem intimidating, but it's one of the most accessible strategies in real estate. The most common form of leverage is through a mortgage or loan from a bank. When you take out a loan to purchase a property, the bank typically covers most of the cost, sometimes up to 80% or more, while you put down a smaller portion, often around 20%. This allows you to control a property worth much more than what you would be able to afford outright. In this scenario, the potential return on your investment can be magnified. For example, if the property appreciates in value or generates rental income, you still benefit from the full value of the property, even though you only contributed a fraction of the total cost. The key to successful leveraging is ensuring that the property's cash flow or appreciation exceeds the cost of the loan, including interest and fees. While leveraging increases the potential for higher returns, it also amplifies the risk. If the property's value drops or it doesn't generate enough rental income to cover the mortgage, the investor must still repay the loan. Therefore, beginners should approach leveraging carefully, starting with smaller deals and ensuring they have a reliable income source to cover potential risks. One of the most consistent and reliable strategies wealthy real estate investors use is focusing on cash flow through rental properties. This approach revolves around owning properties that generate steady, recurring income through rent payments. While the idea of flipping properties for quick profits may appeal to some, wealthy investors often favor rental properties because they provide long-term passive cash flow that continues month after month. This cash flow is a key component of wealth building in real estate, as it creates a predictable income stream that can help cover operating expenses, pay down debt, and eventually contribute to significant profits over time. For beginners, rental properties represent a solid starting point in real estate investing. The key to success with rental properties is selecting the right location and property type. Investing in areas with strong demand for rentals, such as near universities, business hubs, or growing neighborhoods, ensures that you will have tenants who are willing to pay rent. A consistent cash flow can be generated through both single-family homes and multifamily properties, though many wealthy investors tend to prefer multifamily units because they provide multiple streams of income from a single property. For example, a duplex or fourplex can generate more rent than a single-family home, which significantly increases the potential cash flow. Additionally, rental properties offer the benefit of long-term property appreciation. While the income from rent is immediate, the value of the property itself often rises over time, which can result in substantial profits when the property is eventually sold. The combination of monthly cash flow and appreciation is what makes rental properties such an appealing long-term investment strategy. However, beginners should be mindful of expenses such as maintenance, taxes, and vacancies, and ensure they have adequate reserves to manage these costs without disrupting the cash flow. With proper management, rental properties can become a cornerstone of a successful real estate investment portfolio. Wealthy real estate investors understand that one of the key advantages of investing in property is the ability to leverage tax laws to their benefit. Real estate offers several opportunities for tax savings, making it an attractive investment vehicle for those looking to minimize their tax liabilities. One of the primary tax advantages is depreciation. Depreciation allows investors to write off a portion of the property's value each year, even if the property is appreciating in the market. This annual deduction can significantly reduce taxable income, meaning investors pay less in taxes while holding on to their properties. The IRS allows residential properties to be depreciated over 27.5 years and commercial properties over 39 years. By taking advantage of depreciation, wealthy investors can offset rental income and other earnings, reducing their overall tax burden. Another tax benefit that savvy real estate investors use is the 1031 exchange. This strategy allows investors to defer capital gains taxes on the sale of a property if the proceeds are reinvested into a like-kind property. By utilizing a 1031 exchange, investors can sell a property and reinvest the proceeds into another investment property without paying taxes on the gains from the original sale, allowing them to grow their portfolios without the tax hit. This can be particularly beneficial for those looking to expand their holdings or upgrade to more valuable properties over time, all while deferring taxes. Strategic asset management also plays a crucial role in maximizing real estate wealth. Wealthy investors often focus on managing their properties to maximize value and income. This includes regular maintenance, upgrading properties to enhance their appeal, and minimizing vacancies. By strategically managing their assets, investors can ensure that each property is performing at its highest potential, ensuring both a consistent cash flow and long-term appreciation. For beginners, working with a real estate professional or property manager can help ensure that properties are well maintained, tenants are satisfied, and the investment is optimized for tax advantages.